All right, so I want to get your take on these auto tariffs, but first, you sent us some notes. So you see these auto tariffs actually raising inflation as high as to 5% by the end of the year. Are you talking PCE, CPI, and what's going to raise inflation that much? I think it's important to note, we were talking to Milken's chief economist yesterday, that autos, they're not a frequent purchase. They're kind of a one-time, every couple year purchase.
Yeah, but even so, Frank, if we raise the cost of importing by 25%, the supplier has to make a decision. Hey, do I pass that along? Or do I try to suck it up? And the problem is you can't absorb a 25% hit. So obviously they're going to pass it along. And I'm talking about the PCE price index, the favored inflation measure that the Fed targets. And I think by mid-year, we're going to see that run up to about 5%. There will be a lot of pressure in the system. I mean, just think about it. We only produce about 10 million units here in the US, and the run rate now on sales is about 16 million. So you've got a lot of vehicles that all of a sudden are going to cost 25% more. And that will get passed along. When the CPI, new vehicle CPI, is running, a fair proportion to total CPI. So you'll see it come in there as well. The point is, vehicles are going to get more scarce. And when they get more scarce, a seller has the option to raise the price. And so that is a huge concern. It's happening so rapidly.
Ellen, fair enough, it is a huge concern, but I want to talk to you about some of the things that the automakers themselves are at least proposing to the White House to try to reduce some of the impact. One of their ideas that they're trying to pitch to the White House is making low-cost auto parts exempt from the tariffs. A number of stories out in the Journal, other publications, that these tariffs are going to especially hit low-cost autos and pretty much reduce any autos below the $30,000 mark. Do you think this idea of making low-cost auto parts exempt and parts for low-cost vehicles, would that reduce the impact?
Frank, I think not much. That part of the revenue opportunity that's represented by the flow of vehicles coming into the U.S. is relatively small. Right now, the addressable market revenue of the vehicles coming in is almost $500 billion. It's $450 billion. And the parts piece is not the lion's share of that. So, yeah, I think it's going to alleviate some of the pressure. But one of the big issues here is that this is happening so quickly in an industry that needs time to adjust. I mean, you just can't, turn the lever and say, all of a sudden, I'm going to produce 8 million more vehicles here in the U.S.
So, Ellen, is it fair to say you're kind of sounding the alarm? You're very worried about inflation. You kind of see inflation almost doubling. It was at 2.8%. We're talking about core PCE on the last read. You see it going up to 5%. Also, according to your data, the auto industry touches about 10% of all American jobs. So are you sounding the alarm? Are you worried about a recession? What is it that you're most concerned about?
Yeah, I do worry about a recession because we're already hitting 2 out of the 3 factors that cause business cycle turning points. One is policy mistakes and shocks. So we're shocking the system. We have presumably, I think, a policy mistake because we're putting a tariff on in a very short period of time.
All right, so you're worried about possible recession. I want to ask you one last quick question, Ellen. And unfortunately, I have to go. We could really talk about this all day. Coming up to later, we have 2 economic reports that really speak to manufacturing. We have ISM manufacturing. So I'm looking at the estimates right now. The performance last month was 50.3, which is very, very slight expansion. The estimate for March is 49.5, which is very slight contraction. As we continue to look at these reports, are these reports going to show us the impact of these tariffs? Are these kind of the canaries in the coal mine in your mind?
I think we're going to see a red flag on the manufacturing PMI that's coming out. Consumer sentiment is already a red flag. And we're seeing inflation-adjusted stock prices, which is a leading indicator, also a red flag. So 3 out of my 5 favorite indicators are flashing red.